High cuts and U.S. shale production ramping up continues to keep the oil price from sustaining a move in either direction. Joining us from the CME to discuss is Todd Horwitz, Chief Strategist at Bubba Trading. Todd, do we get a breakout in one direction or the other at some point this year?
Good morning, Vonnie. I think you probably will. I think you probably will see a breakout in both directions. I think the first breakout will come to the downside, though. I think that you're going to see that we're trying to continue to make our way down. As we saw, first the low was 47, then we made it down to under 44, and now I think we're going to make one more push to 40, but we could see a little bit of a rally here, probably back up to 48 to 50. We're seeing that there's not a lot of reaction to either OPEC or to any trouble that happens in the Mideast, because we have over a 200-year supply right here without affecting anybody in the green environment world.
Yes, and rig count is now back above 700 for the first time in a long, long time. Talk to me about gold and what gold is doing. We're coming very close to the $1,200 an ounce mark.
Gold seems to be under a little pressure, which doesn't make a lot of sense considering the weaker dollar. But I think what you had is you had a bunch of people buying, trying to speculate into it, and now what you're seeing is the result. But I do think that gold is probably a really good buy, somewhere around here, maybe as low as 1,200. I think that we're going to see much higher prices. I think it's a great hard asset for people to own anyway, so I think around the 1,200 level would be a good place to step in as we'll look to go to higher prices. And of course, it'll stop on the way, probably 1,250, 1,280, and then back to 1,300, and we'll see if it can break above 1,300.
What are your colleagues down there at the CME saying when it comes to the dollar? Is there broad consensus or a real mix of views on whether it will strengthen or weaken?
I think that the consensus is more that the dollar is going to weaken. I think with what we're seeing, even though a lot of it doesn't make sense, one of the bigger problems was the over ramping up of the dollar into the initial Fed, about 6 weeks ago when they did raise rates. And I think you're still seeing the residue of the selling. And I would expect the dollar index to go down to 95. And then you also tie in the strength of the euro currency, because the euro is so strong that is 60% of the dollar index. So that should bring us down probably around 94, 95 before I expect to see any buying come in.
Wow, that is a big drop. All right, Todd Horwitz, Chief Strategist at Bubba Trading, with today's Futures in Focus. Thank you.